Let's bring in Brian Dolan now. He's the chief currency strategist at Gain Capital Group, and he joins us from Bedminster, New Jersey. What do you think, Brian? We have the U.S. House passing legislation. I guess people are looking to see if it'll actually get Senate approval. Your thoughts?
Good morning, Susan. Yes, and you just hit on the key point there. The Senate has to pass this bill next, and that is not likely to be taken up until after the November elections. And there's a much more significant opposition in the Senate than what we had in the House. In the House, we had very strong bipartisan support. In the Senate, we have a much more significant, and not to mention a filibuster-proof Republican minority still. So there's every likelihood that the bill may actually die in the Senate.
Okay, so if it does die in the Senate, at least it makes the politicians look good for the midterm elections. Is this all about politics? Do you think we'll hear the rhetoric as fever pitch as it is now after the elections are done?
I think you'll still see some politicians pounding the table trying to get something done on this, but the exchange rate difference, the exchange rate issue, I personally think it's a red herring. I don't think that's the result, that's the reason behind the U.S.-Chinese trade imbalances. I don't think that's why the U.S. is losing export competitiveness to China. It's simply due to lower costs out of China. And the U.S. needs to focus on industries that we can compete against, where we have the higher skilled jobs, the higher technology investments. That then can lead to some improvement in the U.S. Trade situation with China. But there's no way we're going to be able to outcompete them for very basic industries. Even China itself is starting to lose ground to lower cost other economies over in Asia, Bangladesh, Vietnam. They're starting to take away some of China's lunch. So there's the exchange rate, I think, makes for great press and it makes for great campaigning, but it's not going to solve the problem.
Okay. In fact, you said a lot of attention is currently given to the yuan and the yen and the dollar, but we should be focusing on the euro. And when the euro will crack, what does that mean, Brian?
Sure. The outlook in the Eurozone has been reasonably positive over the summer, and it certainly has differentiated itself from the U.S. and what we've seen in the U.K. and Japan. I don't think that's likely to continue for a number of reasons, not the least of which is upcoming fiscal austerity measures, tax increases in some of the European countries, as well as the lagged effect of a slower U.S. and a slower overall global recovery. That and then the ongoing financial strains in the European banking sector, I think, put the euro back on a track toward weakness later. But for now, the euro is benefiting as the focus is on additional unconventional easing measures from primarily out of the U.S., but also out of the U.K. And so with the ECB not discussing any additional easing, the euro is the standout among the major currencies. So I'm looking at this more as dollar weakness rather than euro strength.
Okay. Brian, I'm running out of time here. Let's quickly focus in on the yen because that is making headlines as well. Sure. What about the yen's strength? We're seeing it trade back below 84 to the U.S. dollar. And, you know, basically Japan signaled that it was going to intervene if it hits 82 the last time it did. What do you think about yen's strength going forward? Are we going to see it crack that level once again?
I think we very well could. The Japanese have been able to mix up the message sufficiently that they've given the market enough leeway to go after a higher yen again. So it's very unusual for them to have made such a large-scale intervention, surprising as it was, and then to step back and allow the yen to strengthen again. There's some reports that the BOJ may increase its bank lending facility again, so provide some further liquidity, and in that way work to weaken the yen. But overall, we do think they're serious, but that doesn't mean we can't see 81, 82 at some point in the dollar against the yen. But from there, I'd like to see it move higher.
Okay. All right, Brian, nice talking to you. That's Brian Dolan of Gain Capital Group.